Sure. Okay. All right. Hi, friends. A very bright hello to each one of you. It's my pleasure to connect and welcome all of you to this webinar session. I'll start with a brief introduction to myself. My name is Sashi Bhushan. So throughout this webinar, if you want to ask any question, you can address me in the chat box by my name, Sashi. I'm absolutely fine with that. I have been connected with some of you. Some of you would have seen me in our typical financial modeling classes. So it's a pleasure to reconnect with you as well. For this particular session, we need a few set of files, which I'm sure all of you would have downloaded from the mail or from the link that was forwarded to you in the mails. So the basic set of files that we require for this first session of webinar is the access to last 2-3 years 10K filings. So this was something which was attached in the mailer and sent to you. So the first file is the Accenture dividend history. It's nothing but the dividend history of the company downloaded from their own website. The second file in this folder refers to a case study. This case study is nothing but a step-by-step procedure that we are going to follow to ultimately arrive at a financial model leading to the valuation of the company right from scratch. A typical modeling should proceed in this particular number of steps in this particular sequence, but depending upon the case, you may have an exception. Depending upon the style, depending upon the geography you are operating into, some of these steps may vary, or the sequence of the steps may vary as well. So please treat this not as a very sacrosanct case study, but in most of the situations this will help you out. This will also help you out how to structure your entire flow of the modeling. The third file is Accenture 10K filing for 2010. Below that is the Excel supporting, which contains all the data which were required, which were provided in the tabular form in the 10K filing. This Excel file has also been downloaded from their website. The link was given to you in the mail itself. So wherever you download this 10K filing in PDF form, exactly adjacent to that there is a link to download the Excel file as well. Below that we have the Accenture 10K filing for year number 2011. Then there is a Excel file which is nothing but the supporting of all the tabular data in Excel format for 10K filing of 2012, and then ultimately Accenture 10K filing finally amended for year number 2012. There is a set of slides which I have prepared for this session that was not shared with you, so I'll show that in due course of webinar, and if required I can also share that in due course of time. We are also going to make use of one research report in order to carry out revenue building for this model. So that research report's name is, that research report has been downloaded from preface.com website. So the link to that website was also given to you. That's again a free report which you can download. And then of course there is a new Microsoft Office Excel file. It's a pure blank file that all of you will have at your end. So this is the blank file from where we are exactly going to start this webinar. I hope I am also having the same set of files which all of you have, except for this presentation which I'll share with you in due course of time. Is there anyone who has problem in downloading these files from the website, or anyone who couldn't download it from the mail, or anyone who doesn't have it in his folder as of now, because we are going to refer to these files back and forth throughout the webinar, at least for the first and second session. Good. So, well, I can see some of the participants typing a question in the chat window that I don't have the files. If you have the latest mailer or invitation mailer from one of our coordinators, you will see that all the files that is required for this webinar are attached over there. So if you are able to locate that file, you should, if you are able to locate that mail, I think you should be also in a position to download all the files from there. So kindly go ahead and download it. It should not take more than 5 to 10 minutes of your time. If you still don't have the files, I can still show you how to download it right from this. So go to Internet Explorer. If you're still struggling to figure out where the files are, go to the Internet Explorer, go to the Accenture website. So I'm just trying to access Accenture website. I'll figure out where the investor relation is. In the contact us, you will see there is a link which says access by investor. So I go to the investor relations section. It says read more. On that, so you can see financial information and SEC filings. Click on that. Click here to view all SEC filings. So I say click on it. Then there is grouping filters, all forms. You select here annual filings. Say filter. So you will see all the 10K filings here in the Word format, Excel format, as well as in the PDF format. So go ahead and download whichever you want. We will be referring to 10K filings for year number 2012, which appears in the second line item here. So you can download this PDF file, you can download this Excel file. Then we will refer to the 10K file that is required, that corresponds to year 2011. So that's appearing in row number 3. You can download the PDF version. You need not download the Excel, because the Excel or even the PDF for 2012 will contain the data for year number 2011 as well as 2012 simultaneously. Then you need to download the 10K filing for 2010, which appears here, and the Excel file corresponding to that. As long as you have these six files downloaded, you have the basic material ready to carry out the session. Fine, so this is what I am making use of. This is the second one, and this is the third thing. Yeah, I will wait for all of you to download, so no problem at all. Please take 5 minutes of your time and download all of them. So as long as you have downloaded the PDF file and the Excel file corresponding to 3 years, I mean, we are good enough to start. Even if you don't have the Accenture case study that was sent along with the mail, don't worry, I'll keep showing that on my desktop as and when required. So I'll just open the case study that was sent to you so that while some of you are downloading the file, you can also go through it so that you know what exactly are we trying to do today. So this entire case has been broken down into a series of 10 steps, 10 or 11 steps, which is, again, as I stated, it's going to be the standard format that we are going to use to carry out or to build the financial model which will ultimately lead to a valuation. These steps have again been broken down on the basis of my own experience in the field of investment banking, mergers and acquisition. This is the typical standard pattern that I will follow if I have to carry out a valuation. So is there anyone who is still downloading the file? Should we go through now? I assume that now each one of you have the requisite files available with you. So while the download is still in progress, as long as we have downloaded the 10K for 2012, it's good enough to get going. So we start with Accenture 10K filing for 2012. Our assumption is fairly simple. We are hearing the name of the company for the first time. We haven't seen any report or anything on the company prior to coming to this webinar. If we have any understanding, or even if there is anything that we have heard about that, we will not refer to it for the time being. So everything that I'm going to derive an information from, it's going to be from these sources of information that we currently have in our folders. And then the next thing is, of course, we'll stretch our brains, we'll apply our common sense to figure out what exactly is going on in this company. So the first thing is, right, as we proceed to read the Form 10K, it's going to be a massive 100 pages document. You are lucky that Accenture is a company who has given you a 10K filing, which is only 100 pages long. There have been 10K filings which runs over 200, 300 pages. Out of this 98 pages, please be sure that we have to read through at least 49, 50 pages in this session just to make a sense of what the business the company is into, what their operating model is, and conceptualize what exactly should be our model so that we are able to give it a shape towards the end of the webinar. So we start reading through it. A good way to read a Form 10K, of course, it's a very boring document, so nobody will want to read it again and again. So a good way to read, or a smart way to read 10K filing, is to keep taking the notes in a file every time you come across something interesting and you think you may have to refer back to it again. So with that intention, I'll start a new Excel file in my, so I say new, I choose a new Excel file, I say Accenture Fin model, and open the file. So my first sheet, I'll call it rename rough notes. So whatever interesting I come across this 10K filing, I'll keep noting it down in a rough format so that tomorrow or again when we are referring to this, we know which page we have to go back to look at a particular item. So this is my Excel file. I go back to my 10K filing. Fine. So there are first couple of pages which simply mentions disclosures or what are the, where the information has been placed. There's nothing relevant as far as financial modeling is concerned. It's good to understand that. So we directly move to the third paragraph. It states item 1 business. We will go through the overview of the business which the company is stating about. So we are one of the world's leading organizations providing management consulting, technology outsourcing services. So recall some of the advertisement that you might have seen or heard of Accenture. So Accenture is primarily into consulting, technology, and outsourcing. About a year or little more than that back, Tiger Woods used to be the brand ambassador of Accenture. If you recall, was a person playing golf and then making good shots and then ultimately saying it's nothing but a typical day in the office of Accenture. So if you're able to correlate to that, you will immediately be reminded of the three business segments the Accenture is into. So one is consulting, technology, and outsourcing. So that's the first source of information that we get across. They are talking about roughly 2.25 million employees across. The offices spread across 200 cities. So they have a multi-country, multi-cities presence, and revenue approximating to $28 billion for fiscal 2012. We quickly scan through this. So this is again a textual portion. So just take a little time to go through this. There's nothing great over here. Consulting, technology, and outsourcing services and solutions. Again, they're talking about now. What they're talking about is in the second paragraph, here, three good platforms: management, consulting, technology, and business process outsourcing. Again, the same thing that we've talked about. So net, we have now some idea about the fact that everything needs to be scattered across these three fields. So it has to be either consulting, technology, or outsourcing. So we'll move ahead. Of course, if the company is operating in the field of consulting or any kind of advisory businesses, the team inside the company has to be grouped across different industries. So immediately following that is the different operating groups this particular company is operating into. So you will see that there are 5 operating groups this company is operating into. Each operating group is split across multiple industry groups as well. So it's like the way a consulting function operates. I mean, there are senior partners in the organization who continuously keep chasing the clients for consulting assignments. Now, each partner or a couple of partners will have multiple sectors or industries to chase. So let's say there is a partner who will be taking or will be fielding across clients in 4 or 5 related or unrelated sectors or industries. Similarly, it's nothing but a loose association of multiples of partners, each one of them covering few sectors and industries, and all of them put together, they cover the entire sector or entire industries working across the geographies. So they have presence across almost all the key sectors that you can see. They are organized across communication, media, and technology, financial services, taking care of all kinds of financial functions, health and public services, products and resources. Products being the most diversified, which moves across multiple industry groups. So if you look into this, there are some close to 19 to 20 industry groups which are covered over here. After that, it follows within each industry group, what are the subgroups that they are talking about. So within communication, media, and technology, what are the sectors that they are covering. I mean, it's a very good reading material if you want to have some kind of exposure towards what exactly Accenture is doing. But in the paucity of the time, I mean, it's a good reading material, but since our main motto is to actually roll all the relevant information into an Excel file and then proceed from there, it can be a good reading material after the webinar or whenever you have some free time. But let's quickly scan through. So fine, we know there are some operating groups. Within the operating groups, they are operating into a good number of sectors. What exactly they are doing into each of the sectors is, I mean, we need not be very thorough with that as long as we understand that most of their revenues are derived from consulting, technology consulting, and outsourcing businesses. So it's 3 functions cutting across some 18, 19 industries. As long as we understand, that's good enough. Let's quickly move to the next pages. So within the financial services, what are the sectors and subsectors they are covering? So covering banking, moving across capital markets, insurance, so pretty much almost everything except investment banking, except merchant advisory, except financial consulting. Within health and public services, well, most of the departments or the organizations run by government will be covered here. Products, very diversified portfolio within the products. Almost everything that you can think of is covered here. So resources, all the non-conventional, all the old economy sectors, all the conventional sectors like energy, chemicals, metals and mining, utilities, everything which you could have thought of as an evergreen sector in the past, everything is covered over here. So products and resources put together will cover, I think, some 70 to 80% of the universe Accenture is operating into. So at the outset, it appears that in order to fully understand what Accenture is doing, you need to be a sectoral expert in each of these sectors. Our claim is that you need not be anything more than a grade 10 educated to carry out a valuation. So as long as you understand what exactly the sector is and that the prime sources of revenue is still the three growth platforms which we have now come across, I mean, you are through with understanding the concepts. So there are three growth platforms that company is talking about. So consulting, technology, business process. So it's a consulting technology outsourcing. This is what Accenture also advertises all throughout, and this is exactly also the focus of their entire business operations. Now, the consulting part, they are referring it as a management consulting. Within the management consulting, what all activities they are, what all the service areas they have. So I'll quickly run through that: finance consulting, operations consulting, risk management, sales and customer support, all kind of activity that you can think of. It's there. Within the technology, it consists of. So now let's talk about technology. So technology, they are saying that the technology platform consists of three services: system integration consulting, technology consulting, and technology outsourcing. Then within each one of these, what are their product offerings? They are given a detailed information about that. Many of us will not be even understanding what exactly they are talking about, except for the few common terms like ERP and SAP. There are many things which we may not even understand. So don't even worry about that. As long as you are scanning through it, it's good enough. I mean, technology consulting, technology outsourcing. So here, so these are the three pages that are important for us because they are talking about the growth platform. So I just go back and note on the page numbers. So growth platforms, this thing, I hope I may have to come back and refer to this sheet again while I'm talking about the revenue. So my first rough note is I make a serial number, I say item, and I say page. So I make a note of this. So the first thing that I think is useful for me, or maybe useful later on, is what are the growth platforms? I have ample information about the growth platform which I'm currently skipping, but I'm noting down the page so that if I have to come back, I'll come back to this again. So this starts from page number 5. Note that I am noting down the page number which is here and not the page number here. So it's a page number 5, speaks a lot about growth platforms, consulting, then it moves to technology, then it moves ultimately to outsourcing. Absolutely no point going through each one of them as of now. So from page number 5 to 7 are the three pages which I think I have to refer again. So I say page number 5 to 7 and I'll make note of that. So I again get back a PDF file. Then they are talking about the global delivery model. This is the model which Accenture has developed recently. More and more employees are getting populated in this model. So don't even worry about that. Alliances, some of the sales and delivery they are conducting in alliance with other organizations which are active in their geography. I mean, of course, for every consulting firm, it may not make sense to have an office in each and every geography where probably the business prospects are not that good for that particular company, or if it's not able to cut through the market share. So they may operate through alliances. They may operate through consulting organizations which are quite popular in that geography. So that's a very good way of operating as well. Research and innovation, so they have to continuously research on new ideas, new concepts, frameworks. Since it's a consulting organization, employees has to be their important asset base. So they are talking about an employee base of close to 257 employees worldwide. So I'll make a rough note somewhere. Total number of employees, because it's the biggest asset of Accenture. So 257,000. It's good enough. Come back to reading again. Competition, now they're talking about what are the competitions they are facing. Again, it's good reading material. The good thing is that we come across this, which is the good thing is this point. Our revenues are derived primarily from Fortune 500 and Fortune 1000 companies. It's a very important fact which tells us the quality of their earnings. It's a very important fact which tells us the quality of the work that these guys must be doing and whether their payments are coming in time or not. It's again a very qualitative. That's a very qualitative way to look at it. Again, a company which is working continuously in the field of research and innovation will have platitude of intellectual property. So they will be filing new patents. There are many more patents that this company has filed. So you will also see something called intellectual property. They are talking about organization structure. This organization structure is not necessarily the organization structure within the company, is the structure which they are is the organization structure which they are talking about, which is nothing but the corporate organization structure, how Accenture PLC is arranged and how the subsidiaries are placed. So this also tells you that when the consolidation is happening, how the financials of the subsidiaries consolidated along with the parents. Since there is a consolidation happening, and it also gives you a clue somewhere that not all the shares are held by the parent, there has to be a minority interest somewhere reported down the line. So we understand where the history is, and if there is any kind of information that I need to understand about the minority interest or how the consolidation is happening, I simply come back to this slide. So I got this as well. So item number 2, I say organization structure. I put down the page number, so it is roughly 9 to 10, and I'm okay with that. In case there is a need, I'll come back to that. Then they are talking about a whole lot of risk factors their business are affected by. It's good to at least broadly understand what it is. So we should read the text which is there in bold italics over here. So at least we understand. So our results of operation could be adversely affected by volatile, negative, and uncertain economic conditions. So like any other business on this planet Earth, their business is also susceptible to uncertain economic conditions. So nothing great. Let's not worry about that. Move to the next one. Depends on generating and maintaining ongoing profitable client demand for our services and solutions, and a significant reduction in such demand could materially affect our. So it's again a dynamics of supply and demand, like any other business. Don't worry about that. If we are unable to keep our supply of skills and resources in balance with client demand around the world and attract and retain professionals with strong leadership skills, our business, the utilization rate of our professionals and our results of operation may be materially adversely affected. This is nothing but they are talking about their biggest asset, which is employee base. It's talking about their ability and skill set to retain the right kind of talent, because ultimately consulting, outsourcing is nothing but a heavily manpower dependent business. The quality of consultants that you produce in front of the client is a direct factor which ultimately impacts your revenue or your repeat businesses from the clients. So they, as the nature of the business itself, they'll always run risk of losing good people around. So the only way they can be keeping them good is to have a good compensation increase year after year, to have a good bonuses. So a piece of information or the kind of restriction the company is operating into, it's a useful piece of information for us to model. So going forward, how their cost of sales will improve or not is again something which will derive its basis from there. So but they understand that it's a very key risk in their business that they continue to maintain a very good portfolio of skilled employees in order to carry out their consulting business. Consulting, investment banking, most of the advisory businesses, audit businesses, ultimately, it's intellect-based businesses. Here you are not trying to sell a product, you are ultimately trying to sell a services. This is nothing but a piece of PowerPoint presentation or probably an Excel file which your client has to ultimately like. So at any point of time, you have to sound more knowledgeable in front of the client. You should sound more knowledgeable, more learned than the person who is on the other side of the table. So you need to retain an extremely good set of people to carry on this business. Fine. We proceed further. So the next risk is the market in which we compete are highly competitive, might not be able to compete effectively. It's fine. So it's again a normal competition. Liability on our reputation could be damaged if we fail to protect client or our Accenture data or information. So talking about confidentiality, business continuity systems. At any point of time, if there is any natural disaster which probably can lead to a loss of data at the end of Accenture, it's again, something which is putting their image at risk. It's nothing much that you can do in your modeling with this. Geographical diversification, growth strategy to continue geographic expansion is good enough, good fight. So we are more susceptible to certain risks operating in more geographies. So of course, each one of them will have a different set of risks with them. Move down. Since they have presence across multiple cities, multiple countries, and each one of them will be drawing revenues in different foreign currencies, ultimately they are going to be converted into US dollar before being reported. So since they are operating into multiple geographies, dealing with multiple exchange rates, they always run the risk of foreign currency exchange rates. Don't worry about that. Global delivery network is increasingly concentrated in India and Philippines. Is again it's a kind of delivery network which they built in low-cost sources like India and Philippines. So, and this team is getting populated with the passage of time again and again. As you recall, somewhere earlier in the 10K, they have talked about global delivery network. It's again not a great thing as far as modeling is concerned. Next one. Our results of operation could materially suffer if we are not able to obtain sufficient pricing to enable us. So this is again, what they're talking about is essentially their ability to price the contract. The kind of pricing, the kind of billing rates that they might have got in the past, if they are thinking they are not able to maintain that because of one reason or the other, this runs a risk. So this also gives us a clue that their revenue, one of the factors which drives their revenue is the utilization rate and the billing rate. Fine. So if they are not able to maintain that, it's like any other manufacturing company saying that I'm not able to maintain the prices in the market, so I always run a risk of shrinking revenue. So this risk is equivalent to that. If our pricing estimates don't accurately anticipate the cost, risk, and complexity of performing our work, or third parties upon whom we rely to meet the contract could have delivery emphasis unprofitable. This also means that they are also trying to outsource. They are also, they are also giving a part of their business, or a part of their business is also carried out or subcontracted to a vendor. So there's the vendors who are working for them. If the contracts with them are not good enough, or if there is a complexity involved with third parties on which they rely to carry on their assignments, so they can also lead to some inefficiencies and unprofitability going forward if they don't, if they don't estimate the cost, risk, and complexity. So it's again, it tells us a lot about the consulting assignments. How a consulting assignment is typically structured is you figure out what is the quantum of work that is required in this consulting mandate or assignment. In order to carry out those, in order to provide those many man hours, how many consultants you need to deploy. Once you have decided how many consultants you need to deploy, consultants at what rank? Do they need to be people as low as analyst, or do they need to be people as high as an engagement manager? So you work out what kind of man hours are required to carry out this consulting assignment. Against that, you also budget their cost. So this also tells us a little bit about how their business is likely to be modeled when we start projecting this. Our work with government clients exposes us to additional risks inherent in government contracting environment. We saw they are talking about health practices. So health, government services, all of them are referring to government clients. Well, till now I have been always thinking that exposure towards government clients or exposure toward governments makes the entire business risk-free. But I'm also, it's really surprising to see this. Exposure towards government client leads to additional risks inherent in the government contracting environment. Probably if they are working in geographies like Africa, probably this may pertain to that. But surprisingly, they're talking about government entities, particularly in the United States, often reserve the right to audit our contract cost and conduct inquiries and investigations of our business practices with respect to the government contracts. So it's again, lots of audits conducted by the state regulators, lots of audits conducted on the contract pricing by the state regulators, any kind of negative findings from audits which have been done in the past and from the audits which are also done in the future. See, this can impact the revenue that they are deriving. This can also impact the payments that the clients are actually supposed to be making to them. So it's really, if you get into any kind of litigation with the government on the contract, the profitability, let aside the question of profitability, the entire revenue for the project may go for a toss. So it's good. This is the kind of risks which they are projecting. So I think they're quite elaborate in listing all their risks. There are many more risks which pertain to that. Business could be materially adversely impacted if we incur legal liability in connection with providing our services and solutions. Fine, it's like the rest. I mean, if we cannot adapt and expand our services and solutions in response to ongoing changes, it's like if I face technological obsolescence, my revenue may not grow as much as I am thinking as of now. So this clause is very equivalent to, or it's in the simplistic term, this clause is very equivalent to talking about technological obsolescence, which may lead to degrowth or no growth in my revenues going forward. As explained earlier, some of the geographies might be covered through alliances. It doesn't make sense to have an office in every geography if the business prospects are not good or if you're not able to cut through the market share. So you need to operate through alliances. So success of any such deal or any such assignment in that particular geography will also be dependent upon the quality of the alliance or the quality of the forging that you have. So if relationship is not successful, it may lead to hampering of the operation. So that's the risk they are talking about. Outsourcing services and the continued expansion of our other services and solutions into new areas subject us to different operational risks. It's fine. IPRs, so it's fine, nothing to talk about. Limited ability to protect our IPR. I mean, as usual, there will be many more litigations about the intellectual property rights. This is nothing new about Accenture. This is, I mean, equally true about every company which is trying to build up IPRs. The intangible properties, each and every time it's contested, there will be many more patents filed up, many more patents in queue for grant. So I mean, it may impact your future profitability. That's fine, but it's again a very generic comment. Our ability to attract and retain business and employees, the factor that we talked about in the beginning, that employees will be their greatest asset. So again, nothing new. Then I scrolled on quickly. I think this list is just not coming to an end. So there's nothing much here that I think will be relevant for our modeling. So I quickly scroll down. You can read it peacefully at the time, but as of now, I'll now shift my focus, because we all have now settled down, towards extracting some quantitative information out of that. So fine, so this is fine. So factors are just not coming to an end. So then they're talking about the executive officers. So this is fine. Again, need not worry about that. We move to the next section now. Here the quantitative information starts coming, and now we should be even more cautious. So they're talking about the share prices, high and low. This is fine, nothing great. Dividend policy, good. So they have a dividend policy. They have clearly spelled that out. They paid cash dividend of this much, this much, this much. So there is a dividend that they're talking about. So there is a dividend policy which will be useful for me sometime later down the line. So I note it down. So 3 is dividend policy. I go back on the page number. So page number is 26. Leave it as of now. Then they are talking about shares purchases. Leave it as of now. Nothing. Quickly move down. Number of share purchases. Now they're giving the highlights of their income statement data. So what was their revenue? What was their operating income? Net income? Don't even worry about that. Leave that. So then they're reporting their EPS. When we tackle the P&L and balance sheet, we'll anyways be giving attention to that. So fine, then there's a management discussion and all. Now we shift our focus towards our overview. So revenue is driven primarily by the ability to executives secure new contracts and deliver new solutions. That's fine. They're now doing the revenue figures, which is again good, great. So nothing, they're simply discussing about that. So it's now time for me, before I can understand what kind of figures they are talking about, I now need to take a quick stock of where their financial statements are. So I quickly move down, because I need to have a feel of their P&L and balance sheet before I start reading this. So fine, leave it. Then they have reported somewhere down the line. On page number 37, they are reporting it operating group wise. So then there is an operating group, there is a geographic region. So they're splitting their revenue across five operating groups and others. Then similarly, they are reporting it across geographies. So America is this one segment. EMEA, so Europe, Middle East, and Africa has been clubbed together as one. Then they are reporting it across Asia Pacific. Then there's a type of work, consulting and outsourcing. Now, consulting and outsourcing, there are two types of reporting here. Now, the surprising thing that I am coming across here is, why, if they have got 3 growth platforms, why are they reporting their revenue only across 2 of them? So my question here is what I have read this slide. So on this, on the business profile of Accenture, what they're talking about is they're reporting the revenue operating group wise because of 5 different operating groups that you can see over there. And then they're reporting it geography wise. Within geography, they're talking about Asia Pacific, EMEA, and then Americas. Within the activity, they are talking only about consulting and outsourcing. While somewhere in the past or somewhere on the previous pages, they have spelled that consulting, technology, and outsourcing are the three growth platforms. So what happens to the technology revenue? Now the answer to this will lie where they talk about these growth platforms. So I quickly say escape, I go back to my Excel file and figure out where they were talking about growth platforms. So they're talking about growth platforms on page number 5 and 7. So I go back to my filing and I go to page number 5 and 7. So here they are. So I go back to that page. In order to go to that page, I am typing here 7. The actual page number lags by the page number in the control find section by 2 pages. So if you have to come to page number 5, you need to type 7 here. Now see what they are talking about. So after management consulting, let's focus on technology. Why are they not reporting the technology? So now they are talking about a technology growth platform comprises 3 services: system integration, consulting. Recall or note the word consulting over here. So they are calling it a consulting. So if you can read this word, this is consulting here, word appearing here. There is a consulting word appearing across technology as well, and then there is a technology outsourcing word. Fine. So now after that they are talking about what exactly they are. So don't even worry about that, as long as you know the technology platform is split across 3 pieces. One is system integration, second one is system integration consulting, technology consulting, and then there's a technology outsourcing. Now within system integration consulting, what they are doing, they are offering platitude of services, so don't even worry about that. Move down, technology consulting, it's again a consulting practice. Technology outsourcing, so they are talking about within technology outsourcing, they are talking about application outsourcing, infrastructure outsourcing. And then there are other services, cloud computing and services. So if you have noted or if you smartly read through this, you can quickly make out that technology is actually, it's nothing but a combination of consulting work on one hand and outsourcing work on the other hand. So the technology thing has been broken down again back into consulting and outsourcing. So if you look into that, I'll just show what exactly I'm talking about in this PPT. So what they have essentially done is the technology portion has been broken down into system integration consulting, technology consulting, and technology outsourcing. It's nothing but the 3 words that I have taken from page number 5, 6, and 7. The consulting portion of the technology has been clubbed with the management consulting. So when they are talking about consulting as a growth platform, they are only talking about management consulting there. To this growth platform, they are also adding the revenues from system integration consulting and technology consulting to make it a consulting segment revenue. From the technology part, whatever is being coming as an outsourcing contract, they are calling it technology outsourcing, which again has 2 splits. It can be an application outsourcing or an infrastructure outsourcing. Since both of them are outsourcing, they are clubbed with the outsourcing platform, which actually is just a business process outsourcing. So when they are talking about consulting platform, they are only talking about management consulting. When they are talking about technology, they are actually talking about 2 kinds of consulting hidden inside that. So these 2 kinds of consulting hidden inside technology coupled with management consulting will actually become the consulting segment for reporting. So the consulting segment for reporting is this one. Then the outsourcing segment will again, as it will comprise of, there's a business process outsourcing, which is the growth platform, and then the application and infrastructure outsourcing, which is coming out from the technology. So now we understand why the company is reporting revenue only across 2 of them. Then I move quickly to this. Then now that I understand what exactly this is about, I'll move to open any of the Excel files. So let's look at the Excel files. Accenture 10K 2012. So this is the Excel file that I'm opening, the 10K file, the Excel file that supports 10K filing for year number 2012. So I'm opening that. Once you open that, you will see that it has got lot many tables which you have already seen across in that 10K filing. So this is nothing but the file supporting the 10K filing. So recall, I mean, there's a sheet called no title 4. Recall, this is nothing but the listing of all the operating groups and the industry groups within that operating. You have already seen this table in the 10K filing. So I'll quickly move through that and I'll figure out where is my income statement. So there is a sheet called income statement, but it's simply reporting the first few line items or the key highlights of that. This is something which is I'm not looking for right now. I'll move down further and I'll locate where the income statement is. So move down, move down, move down, move down, move down. Keep moving, keep moving. So ultimately we'll see balance sheet 1, balance sheet 2, income statement 1. Income statement 1 is the file that I'm looking for. Here they have reported the revenues across 3 segments, for the 3 years. So year number 2012, 2011, 2010, and this is the kind of, so recall somewhere they were talking about that our revenues were in close proximity of 20 billions. This is the figure that we are talking about. Their annual report states that they have reported the figures in thousands of dollars. So thousands of dollars, and then 3 plus 3, 6 digits, so this makes billions. So now this is the figure that we are looking at. So this is the income statement. Now the income statement, the way it has been given over here, is going to be of no use to us unless I am going to convert it into an usable format. So what exactly I'm going to do is I'm going to translate this page into the new Excel file that we have at our end. So this also gives us an ability, and this also makes us move to the next step. So I move to step number 2. I move to the next sheet, which is sheet number 2. I rename it. I call it it's P&L. So this sheet is now ready to carry out the P&L for that. For the purpose of this exercise, whenever you are trying to paste, always leave 4 or 5 row items from the top so that you can actually add some more rows or add some more information that will be coming across later down the line. So I come back to the Excel file that I have in my hand. Now again, you look at this. The way they are reporting is they are reporting it in the, they have reported the latest year first, and then year number 2011, and then subsequently year number 2010. But while we are translating it into a model, we'll need it in the increasing. We will need it in the increasing order of the year. So first year number 2010, 2011, 2012. So this gives me a clue. How should I go about that? So I call first column as serial number, then the second column as parameter. Then I leave a column blank. I generally list units here. If the things are reported in different units, you also need to make clear in what kind of units they are reported. But since it's a financial, and financial will have the same unit all across, so I'll leave that blank, but I leave a column so that if I need to enter some more information, I do that. First year will be year number FY10, then I say FY11, then I say FY12. So these are my audited and actual numbers, so I call this FY10A, FY11A, and then I call this FY12A. Then I'll start with FY13P, FY14P, FY15P. So let's type it once because 16P, and then we'll copy and paste it whenever we need that. So let's say that currently I'm making a projection for 5 years. Why I have chosen 5 years is a topic of discussion again, which we'll handle separately once we move to subsequent sessions. So let's say for the timing we'll represent, we plot historical figures for last 3 years and the forward figures for last 5 years. So this is the basic template that is ready with me. I come back here. First of all, I need to plot the line items. So I'll copy all of them in a single go till my net income attributable to Accenture PLC. I'm not worried about the information below that, whether it's basic, diluted and all. So I'll select this. So kindly look at this. So from this revenue side, I'm selecting all the line items starting from revenues here. So this is the row that I am selecting with. So I'll highlight this from here till here. So this is exactly what I'm going to copy and paste. So I'll copy this entire thing, only the column part. So I'll select revenues, only the column part. So copy this, Control C, come back here. On the parameter side, simply say Control V. Right, so Control V, so entire text has got pasted over here. If you think that the width is not good enough, increase the width or decrease the width, that we'll see again. So that's here now. Now, let's look at this. Let's look at the Excel file that I currently have here. We are trying to report revenues. We are trying to model the financials for 3 years historical. So there are 3 columns here. Then we are trying to project it for 5 more years in future. So there are 8 different columns that we are going to make use of, only to list down the numbers. Then I need at least one column where I can list down the parameters. Then I also feel important to list down the serial number, because at many point of time what happens, there are many heads and subheads. So if I don't use a serial number here, I mean, someone who is looking at this, he doesn't understand that this cost of services is actually made up of this as a line item here and this as a line item here, and then this item is actually a total of these two. So subheads within the particular head is not clear if someone is simply looking at it and if it's not formatted. Another way to look at it is actually format it, so increase the indent so that it appears that these 2 line items are nothing but a subhead of this. If that's what you want to do all throughout, it's fine. Otherwise, you generally go by a serial number. So if I say revenue, so my revenue serial number 1, this comprises of item number 1 here, item number 2 here, and then this revenue is a total of this. Then my second line item is operating expenses, which has got A as a cost of services, which in turn is made up of multiple components here. So this listing enables a third party looking at it quickly understand what exactly are you talking about. So that's the reason why I think there is an importance for having a column serial number as well. So this is another thing. So now there's a net close to 10 to 11 columns that you are going to report on your screen. A good model is a model which needs a third person looking at it to scroll up and down, but not laterally. So ideally, you should report your figures in a unit which is chosen carefully so that you have all the 10 or 11 columns that we are talking about visible on the same screen. You don't have to scroll laterally to figure out where exactly are we. So we now need to choose an appropriate unit from here. I can report the figures as they are reported in the financials here. So that means thousands of dollars. So that means, what should be the width of the column for me to report this? I have to report this for 8 different years. So I can choose to report here, but if that is the case, in that case, there is a very good chance that all my column width need to be more than this, and hence not all the 10 columns will be visible on the same screen. I may have to scroll laterally every time to come across or to figure a trend across the years. So the next choice is convert it into millions of dollars. If you convert it into millions of dollars, still you are talking about some 3 to 5 or 6 different digits. So column width is still going to be more. My sense is that it's better to report it in billions of dollars because they have got significant digits in their numbers. So I will start with reporting them as a billions of dollars because all of them are almost running into billion. All the parameters except for few ones are running across billions of dollars. Billions, the moment I choose billions of dollars, it will also help me keep the column width within the restricted limit that I'm thinking about. It may lead to some expansion, may or may not, that we'll see. But as of now, US $1 billion appears to be the best choice for me so that I can see the entire 10 columns. So I'll now convert everything into billions of dollars and before importing it here. Now, before you can actually work onto this, you'd see that there are some cells which are merged. The moment the cells are merged, if you're typing a formula somewhere down the line, this merge cell will not allow you to operate, so you need to demerge them. So select the cell whichever are merged, go and say it's merged and center, so it's got demerged. Then see which other cells are. So this is another cell which is merged, say F4, it will repeat the last function, F4, it has got demerged, 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 demerged. Fine. So all of them has got demerged now. Similarly, you will need to demerge all of them in this other years as well. So once they have got demerged, this is the way it will appear here. Now convert this into billions of dollars. So I'll make use of the column which is just adjacent to that. I'll say this equal to this figure divided by 10 raised to the power 6. Recall that the numbers in the balance sheet, numbers in the 10K are reported in thousands of dollars. My aim is to convert it into billions of dollars, so I'm dividing it by 10 raised to the power 6 further. Say enter, so I have got this figure. I'll say format, so I'll click on this, so this will format it to this. I'll extend this formula blindly towards all the line items which I have demerged. Towards the bottom, I see that this particular item has not got demerged, so I'll go there and demerge it again. I'll extend this formula. This is also demerged, it's not, so I'll demerge that as well. Now I'll extend this formula till the bottom, and so this is ready to be exported to my sheet. So I'll copy this entire thing till this point. I'll say Control C. I'm now importing it to my own file. So I've simply divided everything by 10 to the power 6. I've copied all of them. Remember, it's a data which corresponds to 2010, which also happens to be my first year. So I've copied it from revenue before reimbursement. So I'll paste it revenue from reimbursement here. While pasting it, I'll say paste special. There are multiple ways to arrive at paste special. The shortcut key that I am using is Alt-ES. It says, okay, fine, paste the values on the number format. So I say okay, and everything has got transferred here. Whatever is irrelevant, you select and delete that. So your numbers should have got copied here. Go back to your sheet, perform the same operation for FY11 and FY12. Now FY11, again the cells are unfortunately merged. So you will have to first clean it. So say, or let's say if it works without, so this divided by 10 raised to the power 6, enter, so you have got that. Fine, just say this. So it's working, so I'll simply use this technique as well. So I have not demerged anything, I haven't done anything, I have simply divided all the figures by 10 to the power 6. So that's another learning for you. Do not demerge the cells as of now. Everything has come in front of you. Can say Control C, apply the same path over here, paste it. Alt-ES, paste special, shortcut key for paste special. You can go to the paste special command by any other route, it's absolutely fine. Say paste only the values on the number formats. Say okay, the moment you have pasted it, the numbers have come here. Value appears in row number 12 and 13, they are of no use to us, delete them. Go back, perform the same operation for figures in FY12. So this equal to this figure divided by 10 raised to the power 6. You can copy and paste the same formula from there. Change the format, drag it down, say Control C, come back to your sheet, Alt-ES, values on number format. With this, our ground to carry out P&L modeling is through. So this is the first sheet that I have prepared. If you are okay with this template, is fine. Otherwise, say Control A. I will like to actually convert it into a Calibri. So Calibri, I'll call this format as 11. I'll also say view zoom 150. So that it's clearly visible to all of you. Fine, now I start sanitizing the data. So this is a simple copy and pasting. So the first part is revenues. Fine, so this revenue is split across two things, revenues before reimbursement and then reimbursement, and then there's a revenue. So this has to be nothing but a total of this. So I'll now start performing some of the operations. So these are the hard-coded numbers. Again, going forward, the hard-coded numbers and the assumptions should be in a different format. so that a person who trusts your modeling abilities but not the assumptions that you have taken only need to review the assumptions part and not the entire model. So you need to highlight it in a different format so that a senior colleague of yours or anyone who is reviewing the model, if he trusts your modeling abilities, if he trusts all the linkages, the only thing that he needs to look at is the assumption. So it should be highlighted in a different format. I generally choose this color to highlight my assumptions or hard-coded figures. So there it is. So I'll convert that. So this figure, if it's everything is fine, this should be nothing but a sum of all these. So this should be equal to sum of this two. I say enter, and this is exactly the figure. If I drag this formula down laterally, I should get the same value. I'm getting the same value. That means this revenue is made up of these two. So this gives me a first clue to talk about my serial numbers. So I say this, align it middle, align it in the middle. So my first Roman numeral stands for revenues. Make it bold. Make it bold. So revenue. Then there's a revenue before reimbursement. Then there is a revenue. So this is again a bold item. So I'll make it bold. Then the second segment of reporting is operating expenses. Now this need not be highlighted, so I'll remove this color from here. Operating expenses. Operating expenses, there is nothing around that. That means there has to be some subheads. So below that is a cost of services. There is nothing in front of that. That means that is also a subheading. So my subheading changes from Roman numeral to another alphabetical numeral, which is capital A. This is again a bold item because it's a head. Within that, what they are talking about, so the first place where the figures are reported is cost of services before reimbursable expenses. So this is there, then there's a reimbursable expenses, then again there is a cost of services. That means these two are nothing but subheads within that. So I change my numbering accordingly here. Then there is a cost of services which says control bold. So this should be actually be made up of this. So I'll select both of them and I'll actually see, are they adding up to this? Yes, they are. So that means these are my numbers and this should be actually sum of. I need to make these changes so that I can drag the formula when I am modeling it subsequently. So here it is. Fine. Then we move to the next line item. So cost of services have been put in. Now then there is a third cost. This is cost of services. So remember how you are listing your operating expenses. So the first was cost of services, which was again split between two heads, which we have identified. So the next head is sales and marketing, which is B. Then the next head is and D is fine. So then there is a total operating expenses which need to be bold and which need to be sanitized along with the formula. So this 15.84 plus this should add up to 20.18, which in fact is the case. So I know that these are the basic numbers and this should be a formula driven. So this should be equal to sum of all these. I say enter. I make these changes here. Right. Then I move towards operating income. So this operating income, ideally they have listed all the sources of revenue. They have also listed all the sources of cost. So this operating income should be nothing but a difference of revenue and the operating expenses. So 2.91 is the figure that I'm looking at. If I replace this by the formula, which I think should be right, so this minus this enters, which gives me 2.91. So it's indeed the right figure. So I now know how this has been derived. So I'm just converting the hard-coded figures into a formula so that I can drag it tomorrow when I'm modeling it for the future years. So this is the next line item that you have got. So there was a revenue, there was an operating expenses, then there is an operating income. So I call it item number 3. It's again a bold item. So I say control bold. I make it bold all across. Then there is a loss on investments, interest income, interest expenses, others, all of them listed one after the other. So I call them A, B, or I mean whatever classification we're comfortable with. So C, D. So this and then all of these actually, so then there is the only thing that you can see over here is that interest expense is reported with a sign. So it's a negative sign, which means that this particular figure is being subtracted from here. So either you retain the same thing in the same format. So actually this formula that you need to type over here is sum total of all this. So either you do that, or ideally I know that interest expense is actually an expense which will be going forward also be projected as an expense. So I'll actually remove the minus sign from here instead, and I'll remove the minus sign from here as well, because I am going to model it as an interest expense positive figure going forward. This is, they are saying that if it's an income, it has to be positive. If it's an expense, it's negative. So there's nothing much that you can do. So this should ideally be 2.91. So recall the figure. So say this should be operating income plus loss on investments plus interest income minus interest expense plus other income. So I say enter. So it's 2.91, same figure I started with. I'm getting the same figure by the formula. If I drag it, the figure should not change if my formula is correct. And I'm dragging it and seeing that none of the figures are changing, so it's fine. Control bold. In the process, what you have actually done is actually have also helped the person understand that it can be a plus formula if the figure is already reported along with the sign. It can be a negative formula if it's, or it's going to be subtraction if it's not reported along with the sign. So this also tells you an importance of listing the sign which is before that. What exactly is the operation that we are performing with that? So what exactly does that mean, and how should we translate that into the model? I'll tell you exactly in some time. So now I have got income before this. All these figures are hard-coded figures, so I'll change the sign here. Loss on investments net, that is also a negative sign, so ideally they should also be converted into the same. So I'll remove the sign from here. I'll remove the sign from here as well, because they are reporting a loss. So it's a negative sign. So this instead, so the formula should become D21 minus D22. I'm just sanitizing the data, so I'm through with this. Then provision for income taxes, the net income. Net income should be nothing but income before income taxes minus provision for income taxes. So this equal to this minus this, enter. So if that is the case, then this formula should work. For the other 2 years, it's working. That means you have entered the right formula, and these three numbers are the hard-coded numbers for you. Net income attributable to non-controlling interest in this inclusive. So these 4 line items are nothing but the same one line item, right? So you say Control X, go here, paste it, copy the text from the next row, go to this, paste it, I and C, so control holdings, I and C, so that you are through with this. Go and say wrap text, so everything has come here. You can get rid of these 3 line items, so say delete. Net income attributable to non-controlling interests, other. So go here, control X, this is nothing but the continuity of the line in the previous row. Control V, enter, and you are through with this as well. Wrap text if you want to, you are free with this. Delete. So 2.06 minus 0.26. So if I add 3 of them, I should end up getting 1.78. That's fine. It's a minority interest. It's the income of the subsidiary that corresponds to the shareholding by shareholding, not by the parent company. So if it's a subsidiary which is not 100% subsidiary or not a fully owned subsidiary, there has to be some minority shareholders. So the income of the subsidiary that corresponds to that portion of the shareholding is generally reported as a minority interest. So ideally, that portion of the earning which corresponds to the minority shareholding ultimately gets subtracted from consolidated net income. So the consolidated net income is your standalone income plus income of all the subsidiaries added to you, less the portion of the income which, less the income which corresponds to the minority shareholder. So they need to be subtracted. So they have already put negative sign and they are through with that, but ultimately if you should actually remove that sign from here, remove that sign and actually say this is subtracted. So I say subtracted, I say subtracted from here, subtracted from here. So this formula should actually be net income minus that portion of the income which is corresponding to non-controlling shareholders in Accenture Canada, one of the subsidiaries, minus the portion of the income which corresponds to minority shareholders in the other subsidiary. So this is what I should be getting. If I drag this formula, I should get the same figures which I am getting, which means your formula and modeling is correct. So I select this, this is bold. I select this, this is bold. I need not require any kind of highlight here, so this is fine. So my P&L, I have laid down the foundation for the P&L myself. So just look at it. So there's item number 2, there is an item number 3, then there is an item number 4 here, which A, then there is an item number 5, then there is A, there is B, then there is an item number 6. So take some time to understand what exactly I have done. Meanwhile, I'll go through some of the queries that have pop up on the screen. I can understand there may be a lag between video and audio for some of you because I can see just 1 or 2 such comments coming up. Well, I mean, try to manage along with me as of now. So I'll just have a short break myself for 2-3 minutes, but you all should continue to work in the background and post your queries. I'm just going through all the queries so that I understand what might be your problem. My voice is breaking again. I mean, since we are sitting across geographies, that may be a question, that may be a problem that you might be encountering, but then why not add comment instead of recording an Excel file? It's totally your choice. I mean, it's totally your choice. You may actually record it. So instead of making a rough notes in the Excel file, if there is any other way to record this on your notebook or on the main Excel file itself or on the PDF file, I'm absolutely fine with that. It's totally yours. I mean, totally your call. Do we have that 2012 and 13 file? This is a question posted by Mr. R. Gore. I don't understand what exactly are you referring to. File for 2012 and 13. There is no file that corresponds to year number 2013. So which file is that? I mean, I don't understand. The Excel file where is copying the data from. See, there were multiple X files that were either downloaded or sent to you through mail. Those Excel files are nothing but the files which contains the background tables for 10K filing. I have also told you, if you have not got that, where to download it from. This is nothing but this Excel file that I'm talking about. This is this Excel file. Here. I mean, this is the Excel file which supports this. The files were also sent along with invites, all the mails. Now, if you have the patience to go through that file, the income statement appears quite later down the file. There is a whole lot of sheets given in that. You keep alternating through all of them, move one after the other. The sheet called income statement appears up down the line. Is that sheet I'm copying the data from. It has to be a sheet inside that 10K Excel file that has been circulated along with the invitation of the mail. If by any chance you are not having that file, I have also told you where to download it from. So I'm making use of the Excel file which appears here on the website. It's not any kind of file which we have created. It's the file fully downloaded from the website. And it's exactly in the same format as it appears there. The only thing is you have to go through all the sheets to really locate the income statement. It appears quite down the line. So, Mr. Gore, are you now able to locate which sheet I am actually copying the data from? Good. I can see an exclamation mark from your side, so I hope you have understood this. Good, great. Or there is a query from Ankit which says can't see what you are doing. Okay. Where can I get the Accenture Excel financial data? The data that I am using, that is I'm going to use in this this webinar as well as the next session, they're necessarily the data from the Excel file that forms the backup of the 10K filing. I mean, time and again I'm repeating that is the same file which was circulated or the files which are available on the website of the company. As of now, I'm not using any piece of information which are not there in the public domain. Mr. Vincent Adiami, so I don't have the Excel file that contains the P&L and balance sheet. The 3 Excel files for 2009, 10, 11 and 12, they are nothing but the Excel backup files. You have the right files, you have to keep moving down the sheet to locate the income statement. So you have the right files, but the income statement is not visible on the screen. You have to keep alternating between the sheet to locate where the income statement is quite later down the sheet, but it has to be there. There's a quick query on the change of signs earlier. I'm changing signs for those parameters. See, my ultimate aim is to convert my model into a readable and a legible model which is making sense to a person who is looking at it for the first time. So he should clearly know what are the items which are added and what are the items which are subtracted. So that's also important. My revenue is actually made up of revenues before reimbursement plus reimbursement. So now I move to that. This query about should we dedicate an entire page for assumptions? Yes, fine, but as of now we have not moved into the assumption section. So as we go into that, I'll also tell you how to insert an assumption sheet. As of now, I'm still playing around. The income before income taxes for 12 changed from 3.91 to 3.90 when the negative sign was removed from loss from investment. That's fine. That's just a, I mean, it's a rounding off to the one place of the decimal. So second place of the decimal, don't even worry about that. PowerPoint presentation was not given along with the files. I agree. PowerPoint presentation is ultimately my creation, which I want to use during this course to elaborate some of the points. If we feel that there is a need to distribute that, we will do that after the class, but during the class I'll take you through each and every slide that I have in that PowerPoint presentation, so don't even worry about that. PowerPoint presentation is just to help you sail through the 10K filing. If the company has already moved into a stable phase, 3 years historical financial is good enough to obtain all kind of trends. So if I have to model a company like Accenture, which is already in a very stable phase, last 3 years audited financials are good enough to give me all kind of trends. Otherwise, if you have somehow managed to get last 5 years financials, it's great. Otherwise, 3 years. Fine. So I think I'm through all the questions now. It would be great if you can have the current Excel file. Yes, don't worry. I mean, whatever I'm preparing today in front of you will ultimately get sent to all of you. We'll start the next webinar on this file. So whatever I'm doing right now in front of you, even if you are not able to keep pace with me, don't even worry about that. As long as you understand what exactly I'm doing, you can try it offhand, offline once you are free. This file will be sent to you exactly in the same format where I'm going to leave it today, and we'll start from this in the next webinar. Because the idea behind this session is to model it right from a blank Excel file. So don't worry if you are not able to keep pace, as long as revenues generated from the global and Fortune top 100 companies related to account receivable. Fine. This is just to give you an idea about the quality of the revenue that they might be having. Since they have, most of the clients are coming from Fortune 500 to Fortune 1000 lists, there is a very good chance that a consulting assignment must be getting paid on time. So quality of the customer speaks a lot about the quality of the receivables. The quality of customers also tells you that your receivable as a percentage of sales or as a days of sales should be on a lower side, which also means that your customers must be paying you timely. So good quality customers means good revenue and timely payments. So that's the bare minimum point that I'm trying to make. It will not give you any kind of clue quantitatively, but only on the quality perspective, this gives us some hint. We will distribute this created Excel file, that I'm creating right now. It will be given to you, so don't worry about that. What to do with the financials of a year if there are some extraordinary losses? Don't worry about that. Continue to use it as they appear in the P&L line items. So leave it as of now. Shall I use last 3 years financials for Infosys model also? I don't understand your question. Is that question in connection with the extraordinary losses? Shrivali will have to elaborate this question. I'm not able to understand because we are talking about Accenture, and if you're looking at some other model, you'll have to tell me what exactly is your query. Fine, with this I think I have been through reading the question, so I'll now again focus on this. Now a person who is looking at it, he should clearly understand what are the items which are added, what are the items which are subtracted. So one way to say that is, I mean, since we all are quite educated enough, we can understand it from the sequence itself. But ideally I like to put a sign over here. So I go before that. Here I put a plus sign in the bracket to make sure that a person looking at it knows that this line item has been added to it to give you a revenue. Fine. So then there is a break, operating expenses. This cost of services is actually made up of item number A and B. So I select this entire thing, say Control C, I come down. Wherever I feel there is a need to insert a sign, a plus, I say this, cost of services. To the cost of services is added sales and marketing, to which you are adding this, to which you are adding reorganization cost. So enter here, so you will end up getting total operating expenses. So this minus this gives operating income, to which you add, so loss on investments. I have reversed the sign here. So it's a loss, so it should now get subtracted. So here this should be this formula. So a person looking at it now knows interest income is something which is an income, so I add it. Interest expense, I reverse the sign again. Recall that I reverse the sign here. Your formula says operating income minus loss on investment plus interest income minus expenses. So I'll put a minus sign here again. So this takes the shape the way you want. Before that it's plus, so I say enter. Before income tax, then there is a provision for income taxes which has got subtracted, so this minus this enter. So then there's a net income for which I am subtracting net income attributed to minority shareholders in one subsidiary, net income attributed to minority shareholder in another one. So ultimately I am getting this. So net, this is the result that is available with me. I quickly jump to the balance sheet now. So I move back, I figure out what was the file that I have, so Accenture 10K filing. I'll move across to locate where the balance sheet is. So balance sheet is right on the left hand side of the sheet, where income statement was. So this was the sheet from where I've copied income statement. This was the sheet where I copied the balance sheet from. I come back to this, I'll do some kind of formatting here. So I copy this entire thing, control row number 7, I go to the next sheet, I paste it here. So whatever work I have done over there, I'm simply producing it here. So I'll copy the entire thing, I'll paste it in the new row, in the new sheet, exactly at the same serial number, same row numbers, row number 7. I say maintain the source column width, so it will automatically take shape. I'll say view, zoom 150% so that everyone looks into that. There's a query from Ashirvad which says, I think formula for EBIT is wrong. Formula for EBIT, I hope when you are talking about EBIT, you are actually talking about operating income, which is listed in row number 21 or item number 3. So This is nothing but revenue minus total operating expenses, so I don't think this should be wrong. I think I've entered the right formula. Yep. There's a request to leave June for 100%. 125. Right, so I'll say June here. I hope this is okay now. No, the one down. So you are talking about, are you talking about income before income taxes? Ashirvad, are you talking about income before income taxes? So what you are talking about is PBT. Are you talking at line item 4, row number 26, 2.91? So this is nothing but operating income minus, so operating income minus loss on investment plus interest income minus interest expense plus other income. I think this is good. This formula is correct now. Remember that I have changed the signs, and the signs are now governed by the signs that I have put in over here, so that it gives a clue to a party who's looking at it. I mean, it makes absolutely no sense to add loss of investments if the heading of the row or the parameter is loss of investments, and the formula over here says sum. I mean, it's something which doesn't get digested by a common person. I mean, as a finance professional, we understand that if the item has been listed along with a sign before it, it automatically takes care of the fact that it needs to be subtracted. But if it's a loss, there is absolutely no way I'm going to add it to this formula, or absolutely a third person will never agree to that. That's the reason why I have simplified it. So whatever is a loss or whatever is a pure identified expense, I have removed the sign from here. I have put that sign here to give a clue, and then I have modified the formula. So that's all. So I move to the balance sheet. So I'll reduce the June to 125. The request is to reduce the June to 100%, but I think 125 should make sense, at least for the timing, so that it's clearly visible to everyone. So I go back to my 10K filing, figure out where my balance sheet is. Now remember, the balance sheet over here is reported for the other income. The other income is actually income, and within bracket it's an expense. So it's actually an income head, and if the income head changes sign, it becomes an expense. So that's the reason why it's actually meant to be an income which is reported as a negative sign, and when it's reported as a sign, it becomes expense for this year. It's again an income for next year and next year. So it's an income which is actually reported under income head. So I'm not changing sign for this. It's something which is not going to be an expense all throughout. It's something which is not going to be an income all throughout because of the sign. Hence, I'll go by a positive sign. And the heading also reads other income. So as long as it's an income, it has to be right, fine. So it's net. So as long as we are calling it an income and not an expense. So if it has been an interest income oblique interest expense, let's say that interest income was reported as a net interest. So then again, I would not have changed the sign over there. But as long as the heading is income, I'm going by that heading. So come to the balance sheet. Now let's quickly pull it off, otherwise we will run short of time. So when the balance sheet is reported, you see that it has been reported only for 2 years, while the P&L was reported for 3 years. So we'll have to look at historical Excel to figure out what was the number for 2010. But first of all, let me perform the task for 2011. So since the numbers are again reported into thousands of this, I'll first copy and paste the headings. So from the asset side, I'll paste everything, copy and paste everything till total liability and shareholders. I'll say Control C. I move here. On the parameter side, I simply paste it. Fine. So I have simply copied it, pasted it. Move down. Figure out what was the value for 2011. So this is equal to this figure divided by 10 raised to the power 6. So I perform the same operation here. Say this here. I drag this blindly. I mean, don't even worry about what's going to happen. So everywhere, wherever there's a number, this will automatically calculate the formula. Wherever there's a blank, it will say control. Now perform the same task here. So this is equal to this divided by 10 raised to the power 6. Enter it. Right, so numbers are So I drag this and I say, so everything is ready here. So I have numbers for FY11, so I'll copy this, Control C, I'll come here, FY11, I'll say Alt ES paste special, values and number format, so everything is pasted here. Wherever there's a value, don't even worry about that, we'll delete that. Similarly, you do it for 2012, copy everything from Control C, come back here, say Alt ES values and number format. Okay, your numbers are through with this. Remove the irrelevant ones. So I clean this. So against a long-term debt, there is a value column here and then there is a 0.00. So we need to figure out why this value is coming here when there is a value corresponding to that. So I locate that. Where is the long-term debt? So there is a long-term debt here, 22. So basically, there is nothing against that. So that figure is 0. So I say 0, enter. These figures are useless. So I have cleaned that. We can perform the exactly same sequence of operation in FY10. So I go back. I mean, I'm not demonstrating that, but where are you going to get the data for FY10? You are going to get the data on FY10 from the other Excel file. That's to you. So here, there is again a balance sheet which is reported. So this contains the data for FY 2010. You have to perform the same set of operations here. This divided by 6 and copy and paste the entire thing in 2010 column. So I'm not explaining that to you. I hope you all now get the point. The income statement was easy because they have reported all the 3 years in single go. So that was easy for you to copy and paste. Here in the balance sheet, they have reported it only for 2 years. So you need to import the data for FY 2010 from any one of the old filings. So you can have the old filings corresponding to year number 2011. I have downloaded and sent to you the Excel filings corresponding to year number 2010. So from there, you perform the same operation, divide the entire thing by 10 to the power 6, import the entire thing over here. So we'll end up getting the balance sheet figures for 2010 as well. So here, so my balance sheet is ready. Now to perform a quick, so I say this, category, I make this 11, change it to middle align, and I'm through with this. So quickly, now we perform this. Now, what are the things that we have figured out of this? So what I have figured out from here is that their year end is 31st August. Then we have converted this, so I'll use any one of the sheet to actually start formatting it. So my entire sheet will run from here to here. So this is going to be my entire sheet. So I'll say merge and center. I'll increase the font. I'll call Accenture PLC P&L statement, profit and loss statement, income statement, whatever is popular in your country, you can turn that, make it center line, control bold. This is the way I would like to format. You can have any other different formattings. I call it 24 font. So this is my Accenture PLC statement. Filling all financials in US dollar billion. So that's one piece of information. Left align all financials in US billion dollar. Then the next thing is year ends 31st August. So that's another piece of information. It's quite unusual for a company to have their year ending on 31st August. I couldn't figure out any reason behind that. Most of the time it has to be a calendar year or a fiscal year, which is generally from 1st April to 31st March, or it's a calendar year from 1st January to 31st. Year ending 31st August is quite unusual, but it's there as of now. So anyone who's looking at the model should understand that for this company the year ends. So there's another piece of information that I have added over here. Then I also need to maintain a count of the year. So I say year count, then FY13 is my year number 1. That's again an input. So I this is my year number 2, this plus this plus 1. So this becomes year number 2, this becomes year number 3, 4, 5. You need to maintain a year count because you don't know at what point of time you may actually be requiring this. So you control C, control V, because the width of this column is more, so I control paste here. So this is how, so right now I've laid down the foundation for my entire P&L. Similarly, with the same set of formatting, I'll move to the other sheet. I'll copy this entire thing and paste it. Now you can remove this rows that you have at the top. So I say delete, fine, it's gone. So I say control C, I move to sheet number 3. I say control V, it will paste everything. It's a balance sheet instead of P&L, so call it balance sheet through. All financial figures $billion, year ends 31st, year count is there. So such rows can be deleted. So you have laid a foundation for balance sheet. Now you can proceed with modeling. Now you can proceed with formatting it in whatever format, whatever color scheme that's applicable in your company, in your business. So then there is a common formatting that I'll be doing across this as well. So there is a cash and cash equivalent, short-term investment, receivable from clients. So all these are the line items. So serial number parameters. The first classification is asset. So I call it Roman numeral 1. This, I hope you all will understand this now. So this, within 1, the first line item is current assets. So I call this A. Within that, item number 1, 2, 3, 4, 5, 6. So this is the way I'll format it. Then there is a total current assets. This total current assets should be ideally be the sum of all these. So if I select all of them, the sum reads 11.47. So I'm okay. So you choose all of them in blue font and change this formula to sum. You are through. Then there is a non-current assets. Non-current assets is comprising of this. If that is true, in that case, this entire thing should add to 4.26, which is the case. So all these becomes hard-coded numbers for me. I change the color to blue font. Total non-current assets, the hard-coded number now gets replaced by the formula. So I've replaced the formula here. I drag this. I end up getting this non-current assets. It becomes control bold. Fine. Then I move to the total assets. This total assets should not be nothing but your total current assets plus non-current assets. So this coupled with this should give me 15.73, which indeed is the case. So this I'll replace by saying this plus this, enter. I'll say drag it. I'll say control bold, and I'm through with this. Now comes liabilities and shareholder equities, current liabilities, current portion of long-term debt. Add all of them. That should add up to total current liability, which indeed is the case. So I'll select all of them, change the color to blue font, and this hard-coded figure will be replaced by sum of all this. Enter, no change. Long-term debt is now this line item costs has actually got a spillover from the previous row item. So contract, after that you make it costs, enter. This line item is no longer required. Retirement obligations, deferred income taxes payable, other non-current liabilities, total non-current liabilities, they should ideally be nothing but a summation of all of this, which indeed is the case. So I'll replace this with formula, enter. I'll drag this formula, I'll say control bold, and all of them are actually blue font. Yep. So this is what converted into hard-coded numbers. Now commitments and contingencies, there are a lot many line items which you can see which are completely blank. So we need to clean them. So within commitments and contingencies, first line item is shareholders equity, that comprises of ordinary shares, which has got a description after that. So there are many more things which are corresponding. So basically the first 3 line items correspond to the same points, 0.00. So if you want to say, call it ordinary shares. So then there's a class A ordinary shares, this is the value. Then there's a class X ordinary shares that has got a particular value. Then there's a restricted share units, then there is an additional paid up capital. All of them actually means fund infused by the shareholders. So I'll actually insert a line over here. I'll say paid up capital. Fine, I'll unbold it. So paid up capital. This paid up capital is nothing but this should be equal to this plus this plus this plus restricted share units plus additional paid in capital. I say enter, everything has got added here. I replace this by this. So this 1.31, I have typed in a formula. Now I know what the total value is. I'll say Control C. I'll replace this formula by hard-coded numbers. So I pasted this. So I have replaced the formula by hard-coded numbers. Now I can get rid of this entire line item till additional paid in capital. Delete it. It's of no use. Then there is a treasury shares at cost, ordinary multitude of line items which are mentioned over there. They're again useless. Replace this by treasury shares. Over. Get rid of this entire line items. Delete. Then you say retained earnings. Fine. Accumulated other comprehensive losses. Fine. These 4 line items should add up to 3.88, which indeed is happening. So this should be equal to sum. Finish them all. Here. Drag it. Then there is a non-controlling interest, minority shareholding. So this plus this should be this. So select both of them. It's indeed 4.35. So this should be replaced by the formula sum of these two. Enter. So this becomes this formula. Drag it. So the total liabilities in the shareholders' equity should be nothing but sum total of current liability, then non-current liability, and then ultimately shareholders' equity. So all of them are indeed, I think it got somewhere. I will just increase the zoom. So view zoom. So this 7.91 plus this current liability plus total shareholders equity should add up to 15.73. It's adding up indeed. So this I'll replace this by sum of current liability plus non-current liability plus total shareholders equity. I'll say enter. So I end up getting this. I'll replace this. Fine. So I'm through with the mathematics part. I've also got rid of all the unwanted rows here. Whatever needs to be bolded up, you just bold it up. So this is equal to this non-controlling interest, this plus this is this. Total non-current liabilities, total current liabilities, you need to bold it. Then you need to list the serial numbers here in a way. I'll do it once again for non-current assets. So I made the first classification based on Roman numerals, which is asset. So there is an asset, then within that capital A refers to current assets, then there is a total, then there's a non-current asset, so I call this B. Come down. So this B is made up of item number 1, 2, 3, 4, 5, 6, 7, then there is a break, then there is a total assets, then there is a liability and shareholders, so it's a second part altogether. So I call this control bold. 1 was asset, 2 is the liability, within that the first line item is current liability. So it's again a bold item. Current portion of long-term debt and bank borrowings. This is again a useless row. So I say control X, come here, control V, enter, and then you are through with this. And then you can carry on all these. So I'm leaving the formatting part beyond this to you, because now we move to the next interesting section. So what is it now? So I go back to this portion, I look at my Excel file. My next aim is actually to figure out how should I move and start projecting the revenue part, because I have been through that. So I go back to my model and I see if there is any kind of notes, nothing that I need to know. So I go back to my Accenture 10K and I start figuring where there was segmental reporting. So at one place we created the segmental reporting and we realized that now beyond this, if we are trying to read it, it's not going to make much sense for us unless we understand what exactly is this. Now this is what I'm going to focus on for the time being. So they are reporting, because now the aim for me is to model a revenue. But if I start modeling revenue, I need to know what are the drivers of the revenue. So the revenue is reported across operating groups, which in turn is made up of so many groups, which in turn is made up of lot many industries and sectors. Then it's reported across geographical regions. Within the regions there will be many countries, and then it's reported as type of work within which it's consulting and outsourcing. I have explained through this PPT, I have explained with this PPT why technology is not reported as a separate source of revenue for them. Now I move towards, now my aim is to figure out what the revenues are made up of. So the revenues now, we have seen there are three ways of reporting it. So the option one is we also continue to report the revenue split across the operating groups, and then going forward we compile them or combine them into the total revenue. But look at the diversification of the business, look at the coverage that they are talking about. They're talking about some 5 operating groups, 19 industry groups. This is nothing but the reproduction of the 10K page that we have already seen before. If you were there with me, you would have realized it's nothing but the reproduction of the same page that I have. Now, if you're trying to identify the revenue drivers by using this route, what are the difficulties that you are going to face? The difficulties that you are going to face is you need to be a person who has a good understanding of all the 5 operating groups. A good understanding of 5 operating groups will come only if you have good understanding of all the 19 industries which are acting as a subset of those. So we are talking about a person who has a good understanding of 19 industries. Within these 19 industries, we need to have a good understanding of the companies which are giving you consulting and outsourcing assignments. Because within each industry, there may be many companies which may be willing to give a consulting mandate, but not necessarily many companies which are willing to give you outsourcing mandate. So there has to be a different set of, the industries which will give you a consulting assignment and the outsourcing assignments are going to be different. So we are essentially talking about, within this 19 industries group, we are talking about classification into those which will give you consulting, which will give you outsourcing, or which may give you both, and then that again a mix. So that's one. Even if you're able to figure that out, you don't know the split of the revenue coming from these industries between consulting and outsourcing. Even if you manage to get that data, because that data is not readily available in the 10K. In the 10K, they are reporting the revenue across both the activities in one head, and that's reported up against that particular operating group. So even if you manage to get that kind of split from any other public sources, look at the kind of variable you have to handle. 19 industries, then consulting and outsourcing industries within companies within that, then they are giving you a revenue, so then there is a growth rate within that. So we're talking about close to some 100 variables that you need to project to arrive at the revenue through this route. So even the best of the analysts will not have the knowledge across all the 19 industries. Their knowledge level will not be up to the mark, up to that level, which will help them project the revenue that Accenture will derive from consulting and outsourcing businesses across 19 industries. So I think probably this route is definitely not the route through which we should be projecting the revenue. It will become very cumbersome if I choose this route. So I'd look at what other option we have. So I move to the second one. The second option is they are reporting revenue geography wise. Within the geographies, they are covering 3 broad geographies. One is Americas. This America is made up of United States, Brazil, and Canada. This paragraph has again been taken from 10K. If you have studied the 10K along with me, you would have located it somewhere in the 10K. So they are talking about America's revenue coming from United States, Brazil, and Canada. So there are 3 countries covered within that. Then they are reporting revenue across Europe, Middle East, and Africa. Now Europe, Middle East, and Africa are 3 different markets, and I could not figure out a reason why. There's 3 different markets with totally different behavioral characteristics. So I couldn't understand the reason behind combining them. But now that they have combined, let's look at the countries which are making this. So the revenue in this is being impacted by the revenue from United Kingdom, France, Germany, mostly European countries, South Africa, and then ultimately your European countries, Switzerland, Italy. Asia Pacific comprises Japan, Australia, Singapore, China, and India. So these are the countries that they have listed. So if we go by this split, we are talking about Americas, Europe, Middle East, Africa, and Asia Pacific, 5 different geographies. Within these 5 different geographies are constituted by 14 different countries, which I could see from this paragraph. There may be some other countries which are yielding insignificant revenue. Even if you go by 14 countries, then in order to figure out how the revenue of Accenture will come from these 14 countries in future years through consulting, because ultimately it has to be a consulting or an outsourcing assignment. So how these 5 geographies are going to behave in future, within these 5 geographies, how these 14 countries are going to behave on a macroeconomic parameter basis, and from that, what kind of consulting and outsourcing assignments will flow to Accenture. So this kind of discovery of revenue is again a very cumbersome process. I mean, talking about 14 countries, it's very difficult to compile even the GDP growth rate of all the 14 countries listed here at one place, which will have a consensus estimate. Let aside what kind of consulting or outsourcing revenue Accenture will derive from this. So this route also appears to be very cumbersome to me. So I move to the third option, which is available with me. So what should I do now? So I move to the third option. The third option, they are reporting activity-wise, where they are reporting revenue only across 2 segments, consulting and outsourcing. I understand what consulting is. I also understand what outsourcing is. I might not be an expert. You need not be an expert even to understand. So the consulting and outsourcing split is clearly available. It's also available for the historical years. The good thing is that if you're trying to figure out what is the implied growth rate in consulting and outsourcing, if you're trying to figure out what's the implied growth rate in consulting and outsourcing, you can do that on the basis of historical data. So to me here, I think if I go by this route and I have a quick understanding of consulting and outsourcing assignments as well, I think my task will be a little easier. Here, even if I have the plenty of data, so now this gives me a clue, or at least my life is simple if I go by consulting and outsourcing split rather than split across the geographies or split across the operating groups. So I will now use this to build my model. So this gives me I go back my and I report the split. So I now figure out that the split between consulting and outsourcing is here. So the revenue that we are talking about, 25.5 billion in FY11, is actually 14.924 on this. So I quickly go and make that change in my model. So now I have frozen how I am going to use to build my revenue. I'll say revenue before reimbursement is actually built up of 2 things. So I'll insert 2 rows before that, F4, F4. I'll call this escape. So this is now going to be sum of the revenue from consulting. So this becomes bold. So I say control bold. I copy this entire thing from here, control C. So that becomes my heading, control V. So this becomes insert revenue before reimbursement. So I say consulting. I say outsourcing. Control bold. If you want to call it this, so you can say revenue before reimbursement, control C, escape. I call control V, consulting, control V, space. I make all the minor corrections that I have to make. So consulting, outsourcing, now I'll quickly populate the split I have. So the split that I have is here. Consulting in FY11, consulting in FY11, 14.924, 10.583. So 14.924, 10.583, 10.583. This, if I choose both of them, so this is the this is the figure in FY11. So I'll put it here. If I choose both of them, they are actually adding up to 25.51, which should be the case here. FY12, so I go back. FY12 is 15.562, 12.3, 15.562, enter, 12.3, enter, control bold. If you club both of them, it's adding up to 27.86. It's adding up to 27.86. Continue to type your questions, guys. I'll look at it in just 5 to 10 minutes, but you continue to type it. Meanwhile, let me complete this so that you have. Fine. So now that I know, so I have to locate the split in FY10. So I come back and I desperately search for it somewhere down the line. If it's there, it's fine. Otherwise, I need to figure out where it could have been. If it's not there, I go to last year's filing, Accenture 10/2011. Down the line, I'll say control find activity. Somewhere on the line you have imported, and the same split that you have located in this will be here somewhere or the other. So there has to be segmental reporting somewhere down the line here. Figure out on this basis, and I populate the revenue from there. So once you get that completed here, you come back to your model. So this will give you a split between this. So now, one second. So once we have everything in place now, so let's get back to our subsequent model now. So we have decided ultimately to figure out what should be the split of revenue going forward. So I locate the exactly same kind of figure from the previous 10K filing and add that here. It's not difficult. I am sure all of you will be actually able to do that. So put the two splits over here. You will end up getting this. Now that we have decided to put it across, so now that we have got the split and we have also decided to keep that as our driving force, we need to understand how the consulting drivers will work. So the consulting drivers, let's say that, just think, there is no one to tell you how the consulting will actually work, but if you simply apply your common sense, or if you are a person who has already worked or interacted with a consultant or investment banker or anyone who provides advisory services, and as the company is stated time and again that the manpower is their biggest asset, then they have, so that's the first clue that I have. The second clue is they might not be able to keep the pricing as high or good as it was in the past. I mean, they run a pricing risk. So that gives me a clue that there has to be some kind of pricing involved here. I mean, there are better ways to explain this, but I'm explaining it from the perspective of a layman, a person who doesn't know. Otherwise, I know how a consulting contract is structured. Then most of the time, a consulting contract is also dependent upon the length or the tenure of the service. The longer the tenure of the service, and most of the time we say that if the consultant has to be staffed for 6 months, that's going to be more, the pricing of that contract is going to be more than if this duration of assignment itself is small. So it's the length of the tenure of the contract as well gives me a clue. So net, I fully understand that by and large this should be something which is talking about a kind of, an employee base, some of them getting started on a project, then working on that project, delivering it, then again coming back to the pool, right? And then again getting started on the other project. That's exactly how a consulting assignment should work. I mean, if you look at this, if you've been into this, so what is it that I need to figure out? Consulting revenue. So my consulting revenue should be made up of what all parameters? Ultimately, this consulting revenue should be made up of just a couple of parameters, which is nothing. The first one being manpower. So how many consultants? So how many consultants I have, and how many of them I'm going to have in the next future. So this is the first driver. Once somehow if I get this information, then once I know what is a consultant, what is my average bill rate. This information is nothing but the refined version of the same clue that I have while reading the risk matrix, which is the pricing. So what is the average bill rate? If someone tells me this, I know. Then the third thing is if there is a consultant available, irrespective of the quality of the consulting firm, irrespective of the supply and demand, a consultant will not remain fully utilized. There has to be a bench period, there has to be a period between two assignments. A person cannot work or cannot be on a revenue generating hours all throughout. So there has to be an utilization level, which is nothing but a reflection of, or a negative reflection of bench hours. And then ultimately total number of hours a consultant is typically available. So if somehow I get these four pieces of information, which ultimately I think are the revenue drivers for a consulting assignment, or as a matter of fact any outsourcing assignment as well, because ultimately in our outsourcing contract also, it's the revenue is being driven by the number of seats in the call center, which in turn is number of seats, which is nothing but the total number of consultants deployed on that assignment. Bill rate, a particular rate that has been quoted against a particular seat. Number of calls coming to a call center, so that means utilization level of that particular resource. So net a consulting as well as an outsourcing contract will again be driven by the same set of four factors, that within each division, how many consultants are there, what is their average bill rate, what is their utilization level, what is the total number of hours available. Now these four pieces of information are not there with me, but I need this because my main aim is to actually rigorously estimate the revenue. If I don't do that, there is no one who will trust my revenue build-up. There are many research reports you will come across, equity research reports, even from the good houses, who will simply present the revenue. They may not even talk about the drivers, or they may talk about the drivers, but they are not going to the granular level to project the drivers. So with that intention, I will desperately search all the reports which are available online, offline, Google search, any other kind of search. And at many places where I have seen, what comes to my rescue is a site called trefis.com. So trefis.com, I hope you would have visited there. If not, the report that I have downloaded from trefis.com was to you. So I hope all of you will have that report. That's again a third-party report, is equity research report, so will not go by what they are doing or what assumptions they have made. But there is one good piece of information that I have found in this report, which is if you simply go to trefis.com, I've also given that link in the mail. If you go by that, they're talking about all the companies, how the value is being derived from each segment. So it's nothing, it's a trefis.com. I've simply downloaded the report from there. It's a free report. The link was given to you in the mail. If you go there and spend some 5 minutes, it's not long before you can download this report. It's a completely free report. And we are not going to derive any basis out of it, only we just quickly go to it. It's one good thing that they are using, or they are doing is, they are also deriving the revenue, or they are also building up their revenue exactly in the same way in which we want to do it. So look at the report that I have here on page number 4. See what are the parameters they are actually taking here. They're talking about bill rate, they're talking about billable hours, headcounts, and utilization. Exactly the same 4 set of parameters that I will actually like to model it across. Remember, modeling it by any other route is going to be even more difficult. There are many research reports, analysts who are covering this, but they are not giving any kind of split. If you are working in an M&A team, if you have the access to the data, it's good. If you have been mandated by the company to value the company, you will have this information. But if you are looking at it from the perspective, which I also think is the focus of this course, because many of you actually got back to us saying that how to carry out a modeling if the information is not there in the public domain. So if I'm an M&A banker, which also happens to query of one of you, that what kind of banker or how a banker will value if you don't have. So the thing is, you desperately search for it on the Google. Somewhere or the other you will get some kind of clue. Use that and apply your own common sense to actually go forward with that. So this report I have downloaded from Trefis. They are listing the drivers exactly in the same way in which I want them. So now come down. Let's see what they have done. So, and I'm not using any other piece of information from this report. Simply go down. I see what they have done. So let's look at the table that they're talking about. So here it is. It's a total revenue for this. So there's nothing. Then this exactly the same thing they have done for outsourcing. So I again go down. So again the same set of 4 parameters: total number of consultants, bill rate, utilization level, EBITDA margin, system integration. So this is fine. So now towards the end, they have actually split it between the 4 headcounts. So this is something which is going to be interesting for us. We'll use the historical split that the report is giving you here. So we'll use only the historical information. So what is the clue that I get from this entire model? Now that I have the information, I have the liberty to move to the next sheet and call that as my revenue build-up sheet. So I go to the new sheet, I call it revenue build-up, and this should not take again next 10 to 15 minutes. I think we are getting delayed, but I will use so. So I copy the entire thing from here, Accenture PLC, this parameter, Control C, I retain the same format here, say Control V, I come down here, instead of P&L statement, I call it revenue build up. Fine. Now, I know that first of all I have to build up the revenue for consulting. So the first heading is consulting. Within consulting, I know what consulting was made up of. So I go to my slide and figure out what consulting was made up of. So I look at this. The consulting was actually made up of management consulting, technology consulting, system integration. So I come back, management consulting, technology consulting, system integration. So I come back, Accenture model. So within consulting, first head is management consulting. Fine, management consulting. Now what are the things that we need to know? So I go back to my preface report and see management consulting. There is a headcount, utilization, bill rate, annual billable hours. I reproduce exactly the same thing here. So headcount, then utilization, bill rate. So ideally the sequence should be bill rate, headcount, bill rate, annual billable hours, annual billable hours, and then utilization. Fine. If I somehow get these 4 parameters, I am able to build the revenue through this. So the revenue that will come from here. So these are the 4 things. Fine. So I reproduce the historical numbers here. So management consulting headcount. So figure out. So here now you'll see that they have different units. So that's the beauty of leaving one column blank. You can use this to reproduce the units here if the parameters that you are going to repeat, the parameters that you are going to report on your sheet are going to have different units. So consulting, so first of all is headcount. So headcount is in thousands. So I say thousands of consultants. Bill rate, they are talking about dollar per hour. So I say US dollar per hour, gone. Annual billable hours, they are talking about thousands of hours. Annual billable hours consultant. So I talk about that. It's thousand. So it's in again thousands of hours. Utilization is nothing but a percentage. I end up getting a revenue. My revenue should be in US dollar billion. Fine. So first of all, I'll test the accuracy of the historical data. So I'll quickly copy and paste and do this entire thing. So headcount. So my headcount over here is, I am doing it for 2010, 11, 12. So 17.5, 84, 170, 17.5, 84. So 17.5, 84, 170, 170, and then this 2.16. Sorry. 17.5 is the headcount. Then the consultant utilization, they have reported in line number 2. We are reporting bill rate in line number 2. So bill rate is 170. So I'll replace this by 170. Annual billable hours is what I don't know. Utilization level currently is 84%. That's what they're stating. So there's an 84% here. Annual billable hours is 2.16 thousand. So I'll keep that as 2.16. As of now, just input the data that they have given. Don't even worry about that. Once you input the data, we'll then start looking at it. What exactly is this? So 19.3. So I simply do it 19.3. I move to the bill rate, which is 175. Then I say 175. I move towards annual billable hours, which is again 2.16. So this remains same as this. Then there is an utilization level which is 87%. So I say it's 87%. Similarly for FY12, 19.8, 128. So 19.8, 178. Then utilization level of 10%, billable hours of 0.16, so it's 2.16, utilization percent of 87%. Now that we have this in front of us, let's see if which one of these makes sense. So they're talking about a consultant headcount of management consultant headcount of 70. Let's say if we're talking about FY12, so they're talking about a consultant headcount of 19.8 thousand. What was the total manpower we had? So we are just trying to figure out whether this report is reliable. Should I rely on this report or not? They have given us a split exactly in the way I wanted. So I am very happy, but at the same time, I should not rely on it blindly. So I'm just trying to figure out if the number of breakups that given is right or wrong towards the bottom of the report. And throughout the report, they have continuously said that they have got this data from the company itself. So they're talking about a consultant headcount of roughly 20,000. And what was their total employee base? Total employee base we have recorded in our rough sheet as 2,57,000. So let me figure out what is the approximate percentage of 20,000 divided by this one. They are talking about a management consulting workforce of just 8%, which I think is quite good enough. I mean, 8% of the total manpower is dedicated towards management consulting only. So this number of appears to be okay to me. But there are other tests that we'll also perform. So I come back, Excel file, I'm going to build up. Then they're talking about a bill rate of $178 per hour. If people from US and UK are attending this webinar, they will find this bill rate quite low. If people who are attending it from geographies like Asia, Africa, they will find this bill rate on a higher side. Remember that Accenture is driving its revenue across all the 4 geographies, all the 5 geographies that we have listed on the presentation. It's Americas, within Americas, it's from North America. They're also counting Brazil into America. So you look at the slide and recall what are the geographies they're talking about. Within Americas, there was also talking about Brazil and Canada. So bill rate in US will be good, bill rate in UK will be good, France, Germany, Italy, again European continents, they are facing their own problems, European countries, but bill rates are going to be good, but bill rate is going to be lower in South Africa, bill rate is going to be lower again in China, it's again going to be lower in India, it's going to be decent in Singapore, it's going to be high in Japan and Australia. So net the blended per hour rate for a consultant has turned out to be $175 an hour or $178 an hour, which I think, I mean, it should be in a close proximity of 200. So they have taken historically at 170, 175, 178, which appears to be good enough to me. I mean, it's fine. But the blended consultant per hour rate is 178. Recall that, I mean, in US, in UK, it should be in a close proximity of 220, 230. Again, depending upon what kind of manpower has been put into this. So if you look at a typical consulting assignment or a typical consulting firm, I mean, the way it's direct is there are partners who are the senior most executive. Their search is continuously to build relationship and develop clients. They will not get staffed on a project. A project is generally governed by an engagement manager, which will be at a senior manager or a manager level. Expensive resource. This person will be, of course, he can't be at the site all throughout. I mean, most of the time Accenture consultants station themselves at the client location and they continue to work from there. An engagement manager, by the virtue of his position, will not station himself continuously at the client site. So, and at the same time, an engagement will comprise of multiple modules. So he will split the entire consulting assignment into a number of modules. Each module will be headed by a module manager. Will typically be a senior consultant or a consultant, equivalent to a position of AVP or an associate in investment banking if that's the banking or correlating to. Again, the senior consultant and the consultants, they are responsible for the particular modules. So since they have the responsibility for the entire module, they will be a person who will be client facing with the, who will be facing the client over there. They will be collecting the data. They will be constantly interrogating the management over there to get more data, more information, because most of the time a consulting assignment or a consulting report ultimately is nothing but an outcome of aggressive data collection and analysis, and secondly an outcome of lot many management discussion. All the conclusions that is presented in a consulting assignment has to derive its basis from management discussion or extensive data mining which your analyst associate would have done on the assignment. So this model manager is the person who can't do all the data mining because he has to ultimately face the client. He has to be also responsible. He will be supported by lot many analysts or consultants or consultant year 1 or associates, I mean depending upon different. So most of the time this is the way a consulting assignment will be staffed. So there has to be one engagement manager, one number, depending upon how many modules he has got that many consultants staffed. Then each consultant will be supported by 1 or 2 analysts depending upon how much volume of work is there in that module. So when we are talking about a bill rate, these are the people who are getting billed on that particular assignment. We are talking about an average bill rate which will be an average of, or which has to be a blend of a bill rate of an engagement manager, consultant or a senior consultant as well as an associate. So if you are looking at the salary or the compensation of a senior manager or an engagement manager in US and UK, it will run into, I mean, a decently high salary. So this now a consulting assignment will have more number of analysts and consultants than an engagement manager. So this entire average or the blended average will shift somewhere close to this. So it will be more on the level of a consultant or even more lopsided towards analyst or an associate than towards this. So net, I feel, I mean, a figure of $170 an hour, which is nothing but, which means that, I mean, most of the consulting contracts are priced at 50% margin, which means that $80–85 an hour should be the salary of the person, at least to begin with, which I think is a decently good figure. So I will go by it as of now. So I move to this. Then there is an average annual billable hours. So let's say what kind of, how they have arrived at billable hours. So they have arrived at the billable hours assuming, I don't know, assuming 9 hours of a day, then multiplied by 20. So 9 hours a day multiplied by 20 days a month multiplied by 12. So 2160 is the number of hours a consultant is available to work throughout the year. So that's exactly 2.16. Remember that the unit over here is thousands. So we are talking about a total number of 2160 hours available with him. Out of this, the utilization is 87%, which is good enough figure. I mean, if the utilization level is close to 84 to 87%, somewhere in the 10K, the company is talking about the utilization level of 87%. So this is good. So if that is the case, that's exactly the way they are going to report it across all of them. So I'll simply copy paste all of these here. So I'll type the formula here as revenue. So this should be nothing but head count multiplied by bill rate multiplied by total number of hours available multiplied by utilization. My objective is to report the revenue from this segment in US dollar billions. So let's say if you have achieved that unit. So there is a 1,000 figure here, there is a dollar here, there is a 1,000 here, there is a 1,000 here. So it's 10 to the power 6. So I need to divide it by 1,000 to convert it into billion. So this is my consulting revenue. I'll drag this in this way. Now if these 4 are going to be my variables to build up the revenue, this also gives me a clue that how my assumption sheet should be structured. So there is a head count, so the head count will grow. So I need to figure out what is the growth rate in the head count. If there's a bill rate, my bill rate is going to grow. So the next sub driver for this is the growth rate in the bill rate. Then there is an average billable hours per consultant. If you don't want to grow it, I mean, it's anyways modeled at the highest number, 9 hours a day, 20 days a week. If you contest, it can be 8 hours a day, 22 hours a week, 8 hours a day, 22 days a month, and 12 month a year, so even more or less it will again come to the same figure, and a utilization level of 87%. So this gives me a clue that what should be my assumption sheet looking like. So I simply copy and paste this entire thing from here, right? And I copy and paste this entire thing from here. Control C, I do here, and I say Control V. Now instead of this revenue build-up sheet, I call it an assumption sheet. Right. So my first parameter should be YOY growth in headcount. Fine. Then the next driver should be YOY growth in bill rate. The third thing should be average annual billable hours per consultant, and then there should be the utilization. So this is going to be, so I'll remove this entire thing from here. Fine, and I'll figure out how the growth rate was in the last year. So F11, what was the year-on-year headcount? So I come back to my build-up sheet. This 19.3 has grown up. So these are my input parameters. These are hard-coded figures. So I'll go and change the font to blue. So I'll change the font to blue. So these are inputs. On the basis of this, I'll calculate what is the historical growth rate. So historical growth rate is this equal to this year's figure divided by last year's figure minus 1. I'm simply modeling. I'm simply modeling any parameter in FY11 should be nothing but parameter in FY10 into 1 plus growth rate. The formula in the revenue shell should be nothing but the multiplication of all the 4 factors divided by 1000. The division by 1000 is just to convert it into US dollar billion. So this is the formula. So my implied growth rate should be nothing but the parameter in FY11 divided by parameter in FY10 minus 1. So I'm using this formula only to figure out the growth rate. So I say this. So this is my growth rate percentage. This I convert this into this, and I end up getting this. Then there is a growth rate. So see the symmetry of the formula. They are structured exactly in the same way in which they have been done in the build-up sheets. There is a bill rate growth rate. So you simply drag the formula this way and laterally. So it will calculate, give you the year-on growth rate in this as well. So now this you are through. These 3 assumptions are in blue font that you are going to retain. So you retain this at the next level. So this becomes this. 87% is a very good utilization for management consultant. It's very difficult to increase this. If we're increasing the headcount, if we're increasing the bill rate, then you should ideally not increase the utilization. Either you retain the headcount, increase the utilization, or you increase the headcount and retain the utilization. So I retain it at the same level as it was in the last 2 years. So I'm being pessimistic here. I drag this formula. 2.6 as a growth rate. FY12 was a decently bad year for any kind of advisory business. So I will assume 3% growth rate going forward on the basis of the data that I have from the past. Similarly, a growth rate of 3% in the past, 2% in the past. So I retain a 2% growth rate going forward. So I say Control I. It's again, it's on the basis of my own understanding of the thing and how the things have moved in the past. It's very difficult to get any kind of view on the consulting. So I retain that growth rate. So I punch it at one place and I say equal to this. Enter, I drag it, and then I put it across. So this is how it becomes. Right, so now I have all the growth rates here. So I go back to my revenue build-up sheet and I change the formula. So instead of, so my formula here should now be last year's headcount into within bracket 1 plus the growth rate that I have assumed. So growth rate that I have assumed here is this. Close the bracket, enter, format it properly, drag it this way, drag the formula down since everything is placed symmetrically, so it will pick up the growth rate inbuilt in bill rate as well. So this has become this. Annual billable hours per consultant, so equal to, go back to your sheet, link it to this place, Utilization will go back to this sheet, back to your sheet and link it to this place, say enter. These two things will come from here, drag it, drag the formula for revenue calculation. Your revenue from management consulting has been calculated. The only two assumptions that you have made over here is the growth rate that you see in the headcount and the bill rate. So make an assumption which you think is right enough right now. We will compare this entire thing with the market share of Accenture in the future years and then make some adjustment if you think that the growth rate, but as of now we are taking a very modest growth rate. So if you have done this, exactly the same thing you have to replicate. So you copy this entire thing from here, Control C, escape. So management consulting, you change it to heading here, and you have to do the exactly same thing for other heads within the consulting. So one is this, Control V, and see what consulting is made of. Consulting is made up of technology consulting, system integration. So come here, change the heading from management to technology consulting, right? So your table is ready. Then you change the heading from management consulting, go back system integration. So change it to system integration. Fine. Your table is ready for this as well. You have to only change these numbers which are highlighted here in blue from that report. So you add all the revenue, we end up getting revenue from total revenue from consulting. Fine. So you end up getting total. Now the same thing, there are three different heads in the outsourcing as well. So Control bold, you select this entire thing from here, Control C, and paste it here, Control V. Now wherever is a consulting, say Control H, replace consulting by outsourcing and say OK. Your model is ready for outsourcing. Back to the sheet C, it's made up of application outsourcing, infrastructure outsourcing. So management outsourcing will become application outsourcing, enter. Then infrastructure outsourcing, so it's technology key, instead of technology say it's infrastructure. Then you come back, system integration, here is made up of B, so call it business process outsourcing. Business process outsourcing, and you are through with your template. Exactly in the same way, you go back to your assumption sheet. Now I'll rename this as assumption sheet. See, your assumption sheet is getting populated now. Copy this entire thing here, Control C, Control V, right? Then now say Control Z. Now wherever there was management consulting, now management consulting will now get replaced whatever heads you have in your build-up sheet. So there was management consulting, there was technology consulting, there was system integration. So Control C, go back to your assumption sheet, Control V, go back to your revenue build-up sheet, system integration, come back to your assumption sheet, system integration, control this, escape, go back revenue build-up sheet, copy this entire thing from here. Right? Or if you don't, because here the figures are in numbers, come back to assumption sheet, copy this entire thing from here, Control C, say here Control V, Control H, consulting should be replaced by outsourcing, replace all, you are through in a single go, heading should now be changed, so come back to the revenue build-up sheet, application outsourcing is the first thing, so make this application outsourcing, revenue build-up, infrastructure outsourcing, so come back here, infrastructure outsourcing, then the third sheet is business process outsourcing, come back, business. So your template is ready. Now the only thing that you need to populate over here is the blue coded numbers. So 2.16 will remain same as throughout. So first you need to populate the numbers from here. So these numbers will appear exactly in the same sequence in the Travis report that we have. So there is a management consulting breakup that I have picked up from here. Move down the report. Then there is a technology consulting business. Technology consulting, you can pick up the numbers from here. So 26.2, 28.9. So Technology consulting headcount, pick up from here, 26.2, 28.9, 29.5, we put the numbers here. Then there is a bill rate given exactly below that. So you can pick up the bill rate from here as well. Utilization level is here. So you can replicate the entire table from here into the 6 different heads here. You have to only change these numbers, the numbers which are highlighted in the blue font. Everything else will be taken care of. Come back to the assumption sheet. Assumption sheet will automatically back calculate all of these heading wise. Then you have to make assumptions about the blue font numbers here. If you think that it's going to be a little different in different cases, so you have to actually replicate the same work again and again. I understand that since you all are our old students, you would have been through the grind of our FMCG case or the financial modeling case. I hope you'll be able to do it yourself. I mean, it's nothing. The main idea was to help you conceptualize how my P&L will look like, how balance sheet will look like, how my revenue buildup will be made, and how my assumption sheet will look like. So the idea was to conceptualize, how to conceptualize it, how to structure it, what gives me a clue that what should be a driver, and once I have identified the driver, or if there are many drivers available, which one should I choose and which one should I not. So with this, I think you are in a position to conceptualize and fill this table yourself, because I think we have had enough practice in the past to fill the templates. So you have to simply reproduce the data from this. Here data for all the 6 different categories are here. So application outsourcing, below that is infrastructure outsourcing. Move down further, there is a business process outsourcing data. Then is a system integration. So all the 6 sets are available in different heads. So the company is doing it in a different way. We have structured it in a different way, deriving the clue from 10K. Once you have the data in place, historical numbers are in place, you use that to back calculate the growth rates and the utilization level, retain the, so the two rows will anyways get retained, billable hours and utilization. The only assumptions that you have to make about the growth rates in the headcount and growth rates in the bill rate. Headcounts and the bill rates are again going to be a property of the company. I mean, there is absolutely no benchmark that is available for consulting industry. Most of the consulting industries that we are talking about, they are also not listed. So you won't have information about the growth rate. So the best thing to rely upon is to have the historical trend and make a modest growth. So the company has already achieved a stable phase. So growth rate in the percent of 2 to 3%, which is also nothing but just a percent or a percent half more than the GDP growth rate of USA, is a very decent or a very likely assumptions applicable for this. So start with a modest assumption, build up the entire model. There are other ways to check your revenue buildups, which is again a market share method. So we'll see that into the next webinar as well. So with this, I think you should be in a position to build up the revenue sheet. The refined version of this sheet will be sent across to you so that you understand what exactly I have done. I can understand you might not have been able to keep pace with me, so this will give you the clue. I will just take 2 minutes to go through the questions, and after that I think we are through with this webinar. I'm extremely sorry for taking time more than what was scheduled. I'm also very thankful to each one of you for sacrificing a few hours from your weekend to listen to what we are saying. So just 2 more minutes, so I'll just go through the questions. The given numbers are as on 31st August, yes, you are right. Shouldn't the balance sheet numbers be taken as on 31st December? Avinav Rustagi. No, I mean there is absolutely no way why the balance sheet should be prepared as on 31st December. We continue to report the numbers as on date on which company has reported in the past. I mean balance sheet, it's good to have a balance sheet as per calendar year or as per fiscal year, but if the company is reporting it unusually on a different date, let's continue with that practice. 31st August is fine. Deferred income taxes are figuring, right? So there are some items which are contributing to deferred tax assets and deferred tax liability as well. So that's what we have looked into that. So we will figure out as we go through the 10 in the next webinar to figure out why they are reporting it separately and what can we do about that. Why treasury shares are in negative? Treasury shares are in negative because treasury shares by all means are the shares which are repurchased by the company and kept in the treasury, or shares which are not issued in the first place. They have been authorized but not issued. So net those shares are not existing in the market. Ideally they should be extinguished So that's the reason why they are in negative. That means a share which is lying with the company itself, the shares not available with public, shares not available with the shareholders. A company has bought the shares and kept it in a treasury. The company may reissue the same shares in future as well. So it's a share which is actually, which should be, I mean, which should have been extinguished by the company. So your paid up capital should have gone down by that amount. So either you adjust the treasury shares in the paid up capital and the premium account and report that, or you report the paid up capital as it is at a historical level and report treasury shares in negative separately. The net effect when you are adding the two will remain the same. The value is in negative because ideally these shares should be, it has been repurchased, so it's no longer existing in the market. Ideally it should be going out. It's not a share in the hand of shareholders. It's a share which has been bought from the shareholders by the company. So money has exchanged hands, shares have been bought back. So 100 shares outstanding, company buys 20 shares. So net in the market only 80 shares are outstanding. So 80 can be reported as a net 80 or 100 minus 20. So this minus 20 is exactly what treasury shares are reported as. Paid up capital formula and the balance sheet. Paid up capital, I have clubbed everything, all the shares of class A, class X and additional paid up capital and the restricted units into one. So there are 4 different line items in the balance sheet. They are unnecessarily occupying the space with a very small value. So I have clubbed all of them into the paid up capital by summing them up, then copying and pasting the values and then removing all the unwanted items from the balance sheet. How does an M&A banker do the valuation if it doesn't have the split of data about outsourcing and consulting for all the 19 industries? I mean, I can understand an M&A banker spending sleepless nights across figuring out this split and then ultimately carrying out a valuation. But this data is going to be of no use because ultimately we will know how this data is split across consulting and outsourcing. What are you going to do about the future projections? So that's what I told you. I mean, first thing is to get the split itself. Even if the split is available, now I know that India is contributing this much towards consulting, this much towards outsourcing, Japan is contributing this much. What next? How much clue do we have about the economy of India? Do we have about the economy of Australia? We have about the economy of all the 15 countries and all the 19 industries that is operating across these many continents. So how are you going to project that? So split is fine, but how are you going to project that? So that's the reason why I'm excluding that as an option for revenue driver. What if they were not presenting in outsource and technology consulting category? How would we have estimated the revenue? Fine. I mean, there has to be some segmental split that will drive us towards projection. So if this was not the chosen way of reporting, there should have been something else. So we would have evaluated whether that split was good or not. If that split was not, then probably you will have to go by what kind of reporting they are doing. So you have to then proceed either by the operating group, industry group, or by the geographies. So whatever is available is good. Out of the available information, I have taken the one that I think is very simple to estimate. How to estimate? We have taken a source from an external party, which is Trefis, only for the historical information because they are reporting it to the level of granularity we want. So that's the only support I have taken from that. And then from here onwards, we are on our own. So with this, I think all the questions have been addressed. There are many other ways to get in touch with us. You can write us in the feedback form. You can mail us as well. So I'll wait for those queries and clarify in the next webinar session as well. So a quick survey has also been launched for you so that we get some feedback from your side about the content, about the coverage, about something that has been forward and that has been explained, and how else can we improve this. So I think that's being shared by my team, which has been shared now. So I hope all of you will be able to see that. Meanwhile, a question has popped up which says, fine, so there are some more questions which has pop up while you guys are taking the Value in D14 in the revenue buildup is different. Value in D14 in revenue buildup is different. So D14 revenue buildup. D14 revenue buildup. It's the headcount of technology consulting manpower in FY10. So you can figure out this number from Trefis report. So Trefis report, we are talking about technology consulting. So management consulting, after that there is a technology consulting. 2010 technology consultant headcount 26.2. This is the figure I am putting, 28.9, 29.5. So 26.2, these two numbers you have to change. So this entire table will change for technology consulting. So these figures will get replaced by 26.2, 28.9, 29.5, 120, 123, 126, 120, 123, 126. So I hope that should help. 23.2, 26.2. I will be getting a recorded version of today's webinar that I think our people have to decide. I'm happy to see some thanks messages from some of you. I'm quite glad myself. Thanks to each one of you for sparing time from your weekend for this webinar. Do you have any source where we can get the revenue drivers for other industries? See, there is no website which will plainly list all the revenue driver for an industry. Plus, that's not even the thought process. We all are now a good professional with good common sense. What I will say is, I mean, the way we started this entire lecture was assuming that we don't have any background from this industry. We don't have any background of the company. You read, understand, apply your common sense. Most of the time, you will come across a driver which you are looking for. There are many websites which may list some of the drivers. There are many analysts which may list some of the drivers, but those drivers may not be useful to you. You may not like to model the revenue in that particular fashion. You may like to model it the way you want. So you should actually identify the drivers which you think are the best, look for it. So there is no one source that I can tell you. Trefis is one such source where I think I have got most of the splits that I want, but it may fail as well. You have to blindly search for it on Google. You have to blindly search through the analyst reports. You have to blindly search through the 10Ks. I mean, there may be a situation where you know the drivers, but you don't have a value for that. So those situations are common. So if you're doing it for academic purpose, if you're doing it for the purpose of enhancing your own learning, I can see that coming as a challenge. But given that challenge, that's exactly the challenge we started with when I was trying to develop this model. We had absolutely no information, but slowly and slowly, by doing a blind search, you will come across something which will give you some clue. Then why is utilization in revenue buildup not in blue? Utilization in revenue buildup is not in blue because I will ultimately feed this from my assumption sheet. Oh, okay. So I'll ultimately feed this from my assumption sheet. So it will be in blue font in the assumption sheet, and assumption sheet will feed it into the revenue sheet. So that's the reason why I have not kept it blue. Since they are constant, you may keep that as blue on the revenue buildup sheet. You may not even produce that in the assumption sheet. I'm fine with that as well. I do have access to lots of research reports, but how do I come to a conclusion? Fine. I mean, sometimes knowledge is bliss. Sometimes ignorance is also bliss. So the lesser the research reports you refer to, more conclusive will be your revenue, and lesser will be the time required to reach to a conclusion. So my suggestion is that you only refer to your research reports just to make sure that the projection that you are going to do is not significantly different from what analysts are doing. Besides that, carry out your own forecast, make your own assumptions. Don't rely on reports. There have been situations where multiple analysts across the globe have given different ratings for the same time horizon. So there are analysts who will be saying buy, there are analysts who will be saying hold, there will be analysts saying sell on the same company for the same time period. So don't rely upon too many of research reports, make your own projections. Well, so with that, I say goodbye to all of you. Hope you all enjoy your weekend. Have a nice weekend ahead. Hope to see you next weekend on Saturday, same time or little earlier than this. Thanks a lot, guys. Thanks a lot.